Right now, our debt's $31 trillion. Our national debt's $31 trillion. Our annual interest is over $500 billion. And everybody's going, oh, it's all right. It's all right. We'll just keep printing money. Well, we're getting to the point now where everybody's going, uh-oh. We're getting to that uh-oh moment. And when you get to the uh-oh moment, gold's going to go higher. So if you're a believer in that, I always say that in order to invest in gold, you really have to be a believer. It's almost a religion. It's kind of like crypto. You got to believe, because the underlying fundamentals, it's all based on theory, really. It's not based on fundamentals.
Durrett, an author and a part of goldstickdata.com, has given some insights into the short-term future of gold and silver amidst the rough economic situation in the country and the falling dollar currency. Recalling previous years when the price of gold skyrocketed, Durrett believes that this year, gold prices can go up, maybe even higher than in previous years. His belief was backed up by Jörg Keener, the managing director and chief investment officer at Swiss Asia Capital. Keener told CNBC that in 2001, the market didn't just move 20 or 30%, it moved a lot. The same in 2008 when we had a smaller sell-off in the market actually, and the stimulus coming back in, and gold went from $600 to $1,800 in no time. So I think we have a very good chance that we see a major move. Concerning the expected gold price rise this year, Keener continued saying, "It is not going to be just 10 or 20%. I think I'm looking at a move which will really make new highs. Because these timelines of gold prices shooting up are not consistent, it is better to strike when the iron is hottest." Durrett believes this, as you will see later on in the video. Before we get into the interview with Durrett, please take a few seconds to hit the thumbs up button for this video, subscribe to the channel if you haven't yet, and turn on post notifications so you would be notified when we upload subsequent videos. Thanks, and enjoy the video.
So now where are we going from here in the short term? In the short term, I think gold's going to go down somewhere between 1,800 and 1,850, and that'll be that final capitulation selling. And once that's done, I think then, as long as gold holds 1,800, that's a really key level. As long as it holds 1,800, we should get to 2,300 this year. So if we're above, we stay above 1,800, say between now and the end of June, then I really think that gold will really run fast. And silver will just, it'll come running. And so once gold gets above 2080, silver will get above 27 fairly quickly. Once silver's above 27, I really think it's going to be like a magnet that pulls it to 30. And once it's above 30, then we're off to the races. But if you want to be conservative, you really want to wait for, 28, 29, 30 silver to jump in if you want to be really conservative. If you're more aggressive like me, you're buying stocks, cheap stocks now, looking for opportunities on this coming dip, and then, basically waiting for this breakout to happen. So, it's all about the S&P and the stock market. We basically need the S&P to go down, I think, sub 3,500. 3,500 was the low for this, so we need a new lower low. Basically, the reason why I say sub 3,500 is important is because that is going to kind of break the back of Wall Street, the momentum and the sentiment. I mean, it's amazing how Wall Street is cherry picking these numbers. I'll just throw one number out there that I saw yesterday, that how Wall Street is just completely ignoring that the possibility that we're going to avoid a recession here, this a soft landing mentality. Somebody posted a chart yesterday on my Twitter page showing the mass layoffs that are coming, the warrants. There's something the corporations have to submit a document if they're going to do mass layoffs in the next 60 days. And that spiked. It spiked much higher than 2008, showing that in the next 60 days, we're going to get a lot of layoffs. So everything, all the data numbers seem to point to a recession. The Fed's going to raise rates next week to 5.25. I'm pretty certain they're going to do that. That's bad for the market, right? Housing is already having trouble with high rates. Autos are having trouble. Retail, commercial real estate's having a lot of problems with these higher rates. We got a lot of headwinds in the economy. So anybody that cherry picks some of the positive numbers, such as GDP, 2.5%, or jobs haven't fallen off, they're not recognizing what's kind of in the pipeline. And what's in the pipeline is these higher rates taking effect. And so that's the reason why I'm saying we're going to 2,300 this year of 1,800 holds, because once things start to trend down in the economy, gold is basically going to get a bid here, I think. So that's my thoughts on gold. Just one thought, and that's the BRICS. I don't think I brought up the BRICS in this so far in a conversation. I really feel that in August of this year, the BRICS are going to have a meeting. That meeting could be historic for gold. So I think we need to basically focus on that August meeting to see what the outcome is, because I really think the BRICS are going to come out with a currency. And Zimbabwe this week, they just came out with they announced they're going to do a gold-backed token, and it's going to be legal tender. So that is kind of an omen that the BRICS will come out with I think they're going to come out with a token as well, basically a digital currency. And then that digital token will have a gold backing of some sort. And that could push gold up, $100, $200, because that's going to be a big currency. So if it's backed 5% by gold, that 5% is enough, I think, to push gold up $100, $200.
The short-term future of gold and silver looks good, but Durrett believes that there will be a slight dip before prices start to rise. Based on his predictions, gold and silver will dip a little. But after that phase is past, the prices of the precious metals will go up quite a lot. So it makes sense to buy any of both of the precious metals, even with that prediction of a slight dip, as the benefits later on would be immense. Another reason gold and silver can become a good profit for you is the situation with BRICS. This alliance of Brazil, Russia, India, China, and South Africa could most likely launch a gold-backed currency that could be digital. If this currency becomes legal tender, it can cause the price of gold to shoot up, especially given that the dollar isn't doing well. Recently, Zimbabwe announced a plan to do something similar to that, and the success of that could be an added motivation for BRICS to carry on with its plan.
It's interesting. This kind of dovetails back into the macro, because I think that the price of gold really revolves around, the economy and, the macro data. And for me, the only reason why the 1% crowd, the hedge funds, basically the big money players, the only reason they buy gold as basically defensive. They don't buy gold for offensive. They don't say, oh, gold's going up, I'm going to buy gold. That's not why people buy gold. It's always defensive, because these are people with a lot of money already. It's an asset that they want, that they feel it's going to basically hold its value, maybe go up 10, 20, 30% over the next 3 years. It's a safety play. And so for me, I'm watching what can trigger basically the big money players into gold. Von Mises, he wrote papers about this back in the 50s, and he said that if you create a false bubble of economic growth, that bubble has to burst if you don't pay back the debt. In other words, if you use debt to create a bubble, you have to pay it back, or else that bubble is just floating out there waiting to pop. And everybody has ignored von Mises. They've ignored him, and he's going to be proven right. And so that's the reason I'm in gold, because the debt bubble, the everything bubble, if you will, at a certain point, it creates a problem, because the debt doesn't go away. It just, like right now, our debt's $31 trillion. Our national debt's $31 trillion. Our annual interest is over $500 billion. And everybody's going, oh, it's all right. We'll just keep printing money. Well, we're getting to the point now where everybody's going, uh-oh. We're getting to that uh-oh moment. And when you get to the uh-oh moment, gold's going to go higher. So if you're a believer in that, I always say that in order to invest in gold, you really have to be a believer. It's almost a religion. It's kind of like crypto. You got to believe, because the underlying fundamentals, it's all based on theory, really. It's not based on fundamentals. It is to a certain extent, but it's really based on, an idea that, you can't print money forever. And then simultaneous to that, one of the things I look at is what's happening in international trade, because the U.S. has really dominated international trade, even though we're not a big exporter, but we are a big importer. But we kind of set the rules of international trade. And one of the rules that we've kind of said was you use the dollar or else we're going to get angry at you. So we pushed people around. We've been a bully, basically getting countries to use the dollar in their international trade. We're also getting on our bad side. And, this is kind of the unspoken stuff. Has the U.S. been a bully? And we have been a bully. If you look at how many coups there's been since like 1900, there's, the U.S. and the CIA was involved in. And so the U.S. is always trying to push its weight around. And I think that's the reason why the Ukraine war started, because the U.S. was basically pushing its weight around. That's a long conversation. But I think it was more economic than anything else. And now that is basically, I think, backfiring on the U.S. And so the U.S. is trying to maintain, that U.S. dollar influence globally and using it for global trade. And I think it's kind of reached its pinnacle, and it's going to basically start to decrease over the next 2 years. That's going to harm the U.S. economy. And if it harms the U.S. economy, it's going to push gold higher. So me, it's just a waiting game. I'm just waiting, and I call it a once-in-a-lifetime trade. This is not a trade that you do your life or over and over again, multiple times. This is a one-and-done thing.
When the interviewer asked him why people were buying and owning gold during this period, Durrett said he saw the buying of gold as a safety measure and not as an offensive move. By that, he means that people who buy gold look to play safe rather than anticipate a boom in the price so they can sell. And this makes sense when you relate it to what was said previously in this video, that the history of gold prices shows that there are certain periods when a boom in the price of the precious metal has happened. Durrett also made reference to the current debt situation in the United States and how it affects the price of gold. According to him, the current debt bubble has grown quite big. When this bubble eventually bursts, there will be an upward surge in the gold price, as the precious metal would take advantage of the situation at the time. The economic recession and the government's inability to fix the problem quickly are pointers that the dollar won't be getting out of its downward pull anytime soon. And the falling dollar affects every other economic activity in the country, ranging from real estate and housing to food prices. These are reasons why an investment in gold and silver would seem like the most sensible option at this point, and one that promises profit in the short term and long term. What do you think of Durrett's prediction? Do you also think the price of gold and silver will increase in the short term? What do you make of BRICS planning on a gold-backed currency? Please leave your answers in the comments section below. We would love to know what they are. Please don't forget to leave us a like on this video, subscribe to the channel if you haven't yet, and turn on post notifications so you don't miss out on our next video. Thanks for staying with us, and I will see you in the next one.